very few people can farm alone, and you're almost always getting help from others, and you're sometimes paying them even. And so there's important things to consider in your farm expenses um, in relation to how you pay the people who are helping you. Uh, there are two kinds of ways to pay people: as a contractor or as an employee. And there's very specific reasons or how to determine which people are to your business. It's certainly simpler to just give a person a check or cash or whatever, and that's an expense. But most of the time, if you have regular workers, for sure, if they're using your tools, if they're working on your schedule, they are actually employees of your farm. And that adds another dimension to your farm business, in the sense then you are responsible for workers' compensation, for unemployment insurance, for paying payroll taxes, and all those things associated with having employees. So it's something to consider carefully when you decide how to obtain help for your farm. A contractor generally comes with their own tools. They come when they want to. There's usually a specific job. Maybe you say, well, for instance, you have to have a pond dug. You hire somebody who has their own equipment, and they come and they dig the pond, and they give you an invoice or maybe they give you a bid maybe ahead of time, and then they'll give you an invoice with that, how much it actually costs. That's clearly a contractor, and that's an expense. And in that case, that expense would be probably a depreciable. It's a capital expense. So to go into that, you can maybe take it in 1 year, maybe you have to spread that cost out. If you're hiring somebody to come help harvest hay or weed your garden, help milk your cows, they're more than likely an employee. And so you have to consider all the requirements of having an employee and make sure that you're following them. And those expenses will be reported on your Schedule F, and then you will also have to pay taxes, their employment taxes in, and so you'll have to have accounts with the various other tax authorities related to being an employer. Some people, usually they're basic enough, you can do them yourself. Some people actually hire others to do that kind of work for them because the laws change, and payroll laws change more frequently than you maybe want to pay attention to them. So that's an option as well. Plenty of farmers still do just hire people by the hour and do it very occasionally. And for the most part, if they're not regular workers for you, that's probably, you could argue that case, that they are contractors, that it's infrequent enough, or that they do this for many other farms maybe, and they hire themselves out. So there are ways that you can legitimately claim somebody's a contractor, but be careful and just make sure you are firm and understand your arguments for doing that. Related to employment taxes, otherwise, for yourself, you are a self-employed person as a farmer when you're claiming a Schedule F. And so you are responsible for paying your own employment taxes on your farm income, meaning that employment taxes, meaning your federal income tax and your state income tax and your Social Security. And so since you are not employed by anyone else, you have to pay a self-employment tax, which is not different than what a person who gets a paycheck is. You just have to pay both the personal part of the Social Security and the business part. So in a paycheck that you might get from a business that you work for, you are paying off the top 7.5% towards Social Security and Medicare. When you're self-employed, you have to pay 7.5% plus the part that your employer usually pays, which is another 7.5%. So you have a 15% basically Social Security tax. They call it the self-employment tax on your farm income, on any profit, not everything you bring in. And that's where the benefit to taking all the legitimate expenses you have to reduce that income that you've brought in, some of which are cash out-of-pocket expenses, some of which might be theoretical expenses in the sense of like mileage, which is an estimate that you use as just a standard rate for, or for things like that you've depreciated or capitalized that you are spreading a cost out. Your cash cost came earlier, you're still taking an expense later. So that bottom line, what we call profit, isn't necessarily the same as what the cash you have left over in your bank account. So they are obviously interrelated, but they aren't necessarily the same. But you want to reduce that on the tax form, that profit that shows. because that will reduce your employment tax, that self-employment tax that is pretty hefty, and you have to take into account when you're thinking of whether it's worth it to do the farming that you're doing, if money is the only reason you're doing it, which is probably not. So one other thing to consider in the compensation that you're giving your workers is oftentimes you might be giving them room and board. And that can be considered and should be considered compensation. If they're employees, that actually can be counted towards the income that you're giving them. Otherwise, there might be just an arrangement you're making. But all of this involves, that kind of responsibility has a quagmire of legal requirements and things that you should consult an employment attorney or a specific farm attorney to figure out what you're being responsible for when you give people room and board and the facilities that you're providing them.